ishirini, safari anza ya kutuunganisha kama Wakenya. Twende tukiuke, twende tukiuke. Let's go beyond, let's go beyond. Let's go beyond. Mimi na wewe tukibuni, kazi nzuri ya kujivunia. Let's go beyond, let's go beyond. Juhudi na matumaini, twaelekea kesho pamoja. Twende tukiuke, twende tukiuke. Safaricom.
Good morning, ladies and gentlemen, and welcome to the announcement of Safaricom's half-year 2020-2021 financial results. On behalf of our Board of Directors, the management team, and staff of Safaricom PLC, we thank you very much for making time to join us virtually for this event. It is a pity that we are not able to meet in person. The COVID-19 pandemic has indeed altered our ways of engagement. However, I am glad that thanks to technology, which is a bedrock of our business, we are able to virtually connect and engage this morning. We hope that you are keeping well and safe and observing the required precautions to help manage this pandemic. This is a first results presentation for our former CEO, Michael Joseph, in his new capacity as chairman of the Safaricom PLC board. Our CEO, Peter Ndegwa, and interim Chief Finance Officer, Ilana Dasi, will take us through the financial performance and results for the period under review. Should you like to keep your social media followers updated, our hashtag today is #SafaricomHYResults. That's #SafaricomHYResults. It is now my pleasure to invite Safaricom PLC Board Chairman, Mr. Michael Joseph, to make his remarks.
Fellow shareholders, representatives of the investor community, the board and management and staff of Safaricom, members of the media and the online community, good morning. Thank you for joining us this morning for the half-year results 2020-2021. We are releasing these results in very extraordinary circumstances, a pandemic on one hand and our 20th anniversary on the other. This 20th anniversary has reminded us of the journey of the last 2 decades and gives us an opportunity to reflect on what has been achieved during these 2 decades and how we can look forward to the next few decades with some optimism. While the pandemic has had serious adverse effects on key sectors such as tourism, agriculture, and manufacturing, it has brought out a key value in all of us, our resilience, both as a business and as a country. I'm encouraged by the fact that Kenya has a resilient population, the majority of whom have heeded to the government's directives to wear masks, wash hands, sanitize, and go cashless so that we can fight this pandemic together. We should not put our guard down now, especially with the current infection spike. We are also encouraged by the government's intervention in stimulating an environment of growth in Kenya. We look forward to increased collaboration, partnership, and goodwill within our regulatory environment for solutions to the benefit of our customers and key stakeholders. Our work over the last months would not have been possible without the regulatory environment that allows innovative businesses to survive and thrive. And we expect that as we move out of this pandemic, that the regulatory environment will encourage further innovation and support. As a resilient and agile telecommunications company, we are committed to supporting our customers and to ensure that they can spend their money where they need it most. This resilience is far-reaching, as is demonstrated by a mobile money platform that has supported an almost 100% cashless economy to stop the spread of the virus. As a purpose-led company, we've been able to diversify our portfolio, maintain a strong balance sheet, and I believe we are extremely well placed to bounce back. We're happy to have been there for businesses, small and big alike, for our staff, our partners, school-going children, the community at large, and the country. We are driven by our purpose to transform lives. We will stand with our customers through storm and into the safety of the new norm. However, that is not to take away from the hardships that our people are facing. The socio-economic impact of the virus is well known. Kenya, like the rest of the world, continues to experience GDP contraction due to sustained pressure on consumer wallets. And as we know, there are many people out of jobs, particularly in the informal sector. Our results, as you will see shortly, reflect the resilience Kenya has showcased so far in dealing with this pandemic. This is evident in the positive trajectory witnessed going into the second quarter of our financial year. Ladies and gentlemen, while the challenges ahead cannot be understated, we firmly believe that our business is well cushioned to support our customers, to rebound stronger and to build back better. At the board level, we will guide the management to grow the business from a confluence of technology, telecommunications, and financial services. We will continue to do this while staying true to our DNA of transforming lives. In conclusion, ladies and gentlemen, our future is based on a promise that is tied to our Safaricom at 20 pledge, to go beyond for our customers, go beyond in our products and services, and for our staff. Peter will speak about this in detail. The board will continue to support Peter and the management as they engage in activities to get the business into the trajectory we are well known for. I assure the shareholders that the board is committed to working with the management to deliver our brand promise of being simple, transparent, and honest. With those remarks, I now take this opportunity to invite our Chief Executive Officer, Mr. Peter Ndegwa, to talk more about our strategy and the performance highlights for the half year. Thank you.
Thank you, Michael. Fellow shareholders, representatives of the investor community, the board, management and staff of Safaricom PLC, members of the media and the online community, good morning. I would like to take this opportunity to welcome you all to our 2020-2021 half-year results announcement. When I joined Safaricom 7 months ago, the country was in the early days of the COVID-19 pandemic. We were all trying to understand the pandemic and the effect that it would have on our lives and on our businesses. However, at Safaricom, we were also aware of our role in community. I'm proud of the work that we have put in place to help the country navigate through these unprecedented times. Looking back, we've gained lessons and insights that will shape our business in the years to come. Top among the lessons is to stay true to our commitment of leading through purpose. That is putting people and customers first, transforming lives. Ladies and gentlemen, let me now talk about our strategy going forward. Over the past 20 years, we've leveraged the purpose-driven business model, combining the power of mobile technology and innovation to transform lives. As we celebrate our 20th anniversary, I'm confident that we've embarked on the right strategy to pivot the next 20 years. Our vision is to be a purpose-led technology company by 2025, as shown in our strategy house that is on the screen. My mission, as I recently shared with the board and staff for the next 18 months, is to establish a customer-obsessed, digital-first organization delivering strong growth by the end of the financial year 2022. Ladies and gentlemen, our strategy will be supported by 4 transformative pillars. These include strengthening the core, becoming a fully fledged financial services provider, growing into a full digital ecosystem while staying prudent in our cost management to be able to fund a sustainable growth into the future. Our pillars will ensure that we run a holistic technology business for the future. These pillars will be enabled by 5 key strategic enablers, including partnerships and mergers and acquisitions. I recognize the need to solidify our market position with our traditional products such as voice, data democratization, whilst finding new verticals to grow our business. Verticals such as agriculture, small, medium enterprises, and MSMEs, forecast opportunities, health, and education, amongst others, will drive retention and continue to power our growth. We have experience and expertise on how mobile technology and connectivity drive social and financial inclusion. We are keen to set up operations beyond our borders into Ethiopia, subject to the relevant regulatory approvals. With M-PESA, we will step up the success in Kenya by going to the rest of Africa. We are broadening our financial services portfolio, evolving M-PESA into a broader financial platform that becomes a lifestyle choice, especially for our SMEs and MSMEs with products around wealth management, insurance, credit, and savings, amongst other propositions. To achieve our vision, we've set on a journey to being customer-obsessed by living up to our brand promise of being simple, transparent, and honest. We are focused on being the technology partner of choice for our customers. So over the next 18 months, we will steer the organization to make big shifts that enables the achievement of our vision. My personal goal is to continue to deliver for the organization, to be purpose-led, which will translate to value for our shareholders. Ladies and gentlemen, I'll now address our support to the country during the COVID pandemic. As Michael has noted, the pandemic has had adverse effects on various sectors of the economy. Like everybody else, we were not spared. During this period, we've ensured that our products and services keep our customers connected as we support them to achieve their goals. We do not take it for granted that our products and services play a central role in the lives of 35.6 million Kenyans. We've supported the country through various initiatives since the pandemic. These include zero-rating M-PESA transactions below 1,000 shillings to reduce the risk of handling cash and increasing transaction limits to support small businesses. It also includes Bonga for Good, doubled bandwidth on our fiber connections, both home and office, and the 24-hour COVID Information Center in partnership with the Kenyan Ministry of Health. This pandemic has opened our worldview to doing things differently. For example, 80% of our staff continue to work from home with sustained high productivity. We've seen how our staff and our partners quickly adapted to the new normal. This agility will help us realign our operations as we cautiously but optimistically enter a phase of post-pandemic recovery, albeit with signs of a second wave. Let me now talk about how we are building a more resilient business during this disruptive period. As a business, we focused on being proactive and responsive during this disruptive period. Thanks to this, recovery was visible in Q2 despite restrictions that came in the wake of the virus. And even now, as the restrictions begin to lift and as we shift into the rebuilding phase, we remain a purpose-driven organization committed to the delivery of relevant products through operational excellence. Thanks to Tunukiwa customer offerings, we are regaining traffic share in our voice business. We remain committed to building a network infrastructure that supports the country's economic development. We are projecting 100% 4G coverage across the country by the end of the year. Currently, we're at 91% coverage. Fiber to home business continues to grow at an impressive rate, driven mainly by increased connections due to working from home. Current penetration of homes passed is at 53.5%. We are working towards helping SMEs digitize their services and get more value with the M-PESA platform. On the M-PESA side, we continue to innovate, targeting MSMEs and SMEs to empower these entrepreneurs to manage their business better. We recently launched Poshi la Biashara, an innovative product that will allow them to separate business and personal wallets. Products such as Lipa na M-PESA Merchant app enable small businesses to be more effective in managing their business deals. We've seen our agents growing by 22.3% during this period, despite the pandemic. We are focused on bridging the digital divide through initiatives such as Lipa Mdogo Mdogo, which we launched during this period. This plan targets over 10 million Kenyans over the next few years who are using 2G phones to be able to purchase a 4G phone affordably without straining their wallets. As a result, we've seen improving service revenue trajectory in Q2, signaling slow economic recovery and improved execution. Ladies and gentlemen, I'll now cover the performance in our underlying business. We've reported sustained recovery across most of our key performance indicators as shown on the screen. The growth, especially in our customer numbers across different KPIs, is a positive sign of the business resilience and the opportunities for the future. More than ever, this is proof of our support to the country by providing products and services that are meaningful to our customers. I'll now invite our acting CFO, Ilana, to take us through the numbers in details.
Thank you, Peter, and Karabuni, ladies and gentlemen. I hope you are all keeping safe, and thank you for taking time to join us this morning. Before I start, I would like to remind you that presentation materials will be available shortly on Safaricom's website. As Michael and Peter have noted, we are operating in extraordinary times. The effects of this pandemic are far-reaching, including our performance for the period. I will now take you through this in a little bit more detail. The impact of our response to COVID-19 in zero-rating M-PESA transactions weighed heavily on our performance for half one, with service revenue posting a decline of 4.8% and EBIT a decline of 10.5%. We will unpack this a little more in subsequent slides. Despite this, we actually accelerated our capital expenditure, increasing 25.5% year on year. As Michael said earlier, we believe we are well placed to bounce back from this pandemic, and our strong balance sheet has allowed us to continue to make important and significant investments in the business to support its sustainability for the long term. I am pleased to note that our operational efficiencies yielded cost savings that helped alleviate the pressure on contribution margin. We saw OPEX reduce 10.6% on a reported basis and 6% on an underlying basis in the period. I'm also happy to note that our continued focus on providing relevant products to our customers yielded a 10.2% increase in our 1-month active subscribers for the period, with that growth visible across all revenue streams, as Peter noted earlier. Now looking at service revenue in a bit more detail. As the chart on the left illustrates, the adverse service revenue performance is mainly attributed to M-PESA and the zero rating of fees. Voice also declined. It was under significant pressure in Q1, but as Peter called out, strong CVM offerings yielded a much stronger performance in Q2. I'm happy to note that mobile data growth nearly offset the decline in voice in the period. And in the second quarter, its growth more than offset the decline, which we will speak about a little bit later. Fibre to the home performed very well in the period, driven by an increased demand necessitated by working and schooling from home. The last bucket is our other remaining revenue streams. The National Police Service contract under fixed data revenue, which ended in November 2019, being the main driver of the decline in the period. Moving right across the slide, you can see that our service revenue profile has changed in the period, with M-PESA now accounting for 30.3% of our total revenue, down from 33.8% the previous year. The chart at the bottom right of the slide reiterates the point that Peter made earlier. We saw a lot of pressure in the first quarter, with some recovery in the second, and we're encouraged by this momentum as we move into the second half of this financial year. Now, to look at M-PESA in a bit more detail. It is the most impacted segment within our portfolio, posting a year-on-year decline of 14.5% and a 23.5% decline in ARPU. As I called out earlier, the decline is driven by the zero rating of transactions, which affected transfers and payments. Betting continues to decline as we lap the impact of the contraction of the industry that started last July. Withdrawals declined for the period, impacted heavily in the first quarter by movement in restrictions. On a positive note, IMT, which is international money transfer, continues to perform strongly, nearly doubling year on year. The last bucket in this graph is savings and lending, which performed very well for the period, driven by Feliza, with the repayment rate actually improving in the period to 99.4%. As can be seen on the graphs on the right-hand side, you can see a V-shaped recovery pattern across all main revenue streams, which is encouraging. It is driven by an easing of restrictions, opening up of the economy, continued innovation of our offerings, and a shift in consumer behaviour more towards cashless transactions, a behaviour we hope will remain in the future. Looking at the same information, this time from the perspective of value, the story looks more positive, and the underlying health of the M-PESA ecosystem is evident. The value of transactions increased 32.9% year on year. This is supported by the innovations made during the period, some of which Peter spoke about. The strength of the underlying KPIs, along with the innovation pipeline, will ensure that we are well positioned to drive recovery in M-PESA as we continue to expand the number of use cases, enhance our offerings, and drive convenience for our customers. Just to note, more details on M-PESA's performance can be found in the booklet on our website. Let me now move on to mobile data, where as digital adoption accelerates in our market, we are pleased with the commercial progress we are making. As I mentioned earlier, the growth in mobile data in the second quarter more than offset the decline in voice, with data increasing by 1.2 billion shillings in the quarter, while voice declined by 0.7 billion shillings. Looking at the top left of the slide, you can see consecutive growth quarter on quarter, with an overall growth of 14.1% in the period. Moving down to the bottom left, you can see that bundle customers largely grew in line with overall customers at about 5%, while customers consuming more than 100 MBs and active 4G devices grew at a much faster pace of 8% and 16% respectively, thus signifying an increase in data penetration in the period. Looking at the box on the right, you can see that while the effective rate per MB continues to reduce, the usage per subscriber has continued to grow and at a much faster pace. Thus, the overall ARPU in the period increased 3.5%. Moving on now to fixed data. As I mentioned, we are very pleased by the strong acceleration of our fibre to the home business, which benefited from the work and study from home shift. This was the main growth driver for this revenue stream, growing at 47.2% year on year. Moving across the chart, you can see that fixed enterprise didn't perform so well, impacted in quarter one with the closure of offices and some customers downgrading their packages. We have, however, seen a significant increase in the number of customers, as can be seen from the graph at the bottom right, mainly driven by SMEs taking up our LTE offering. However, this customer uplift is offset by ARPU erosion from a lower value offering. As Peter called out, this customer segment remains a key focus for us as we expand our customer base beyond the large enterprise space. The graph on the top right shows the good momentum on home customers and also penetration. Now more than 50% of homes passed being connected, as Peter called out earlier. Ladies and gentlemen, as I called out earlier, EBIT, or earnings before interest and taxes, recorded a decline of 10.5% in the period. The decline was driven by the loss of revenue from zero rating of M-PESA transactions, which put pressure on our contribution margin. We have also seen a shift in consumer behaviour around M-PESA, with deposits and the associated commission actually growing in the period. More details on the breakdown of our costs can be found in the booklet on our website. Moving across to the right, you can see a significant OPEX saving to help mitigate the impact on our top-line performance and some of the adverse cost movements in the period, like foreign exchange. Thanks to sustained operational efficiencies, we continue to deliver OPEX savings in the year, with a saving of 6% on an underlying basis, excluding one-off releases. Now, lastly, looking at Capex. As I mentioned earlier, we sustained investment in our network and systems, with our capital additions for the first half amounting to 22.75 billion, an increase of 25.5% year on year. We continue to enhance our network in support of traffic growth, coverage, experience, and investing in our IT capability. For example, M-PESA, where we rolled out the latest version of the platform to facilitate faster product rollout and easier integration of APIs. Whilst our Capex intensity will show an increase this year, we are confident that the investment is well placed to support the future growth of the business. Thank you, ladies and gentlemen, for your attention. I will now hand back to Peter, who will take us through guidance for FY21 and some summary remarks.
Thank you, Ilana. I'll now cover our full year earnings guidance. During the financial year 2020 earnings announcement, we were not able to give guidance given the uncertainties around the pandemic. With the first half now behind us, the current outlook for the second half, coupled with better than expected performance in the second quarter, allows us to provide you with our full year financial expectations. I want to highlight some of the key impacts on our business from the pandemic that continues to inform our assumptions. The most immediate and dire impact continues to be how the pandemic will play out in Kenya, its economy, and the consumer wallet, especially with the recent spike in infections being recorded in the country. The second is when we resume charging on M-PESA, and the third is the consumer behavior regarding the elasticity on pricing when we do return to charging. In view of this, we expect the earnings before interest and tax to be in the range of Kenya shillings 91 to 94 billion, a decline of 10.5 to 7.5%, and we expect Capex to remain in the range of 35 to 38 billion Kenya shillings, with this year's spend largely remaining in line with the previous year's absolute terms. With a new business strategy and our renewed focus on customer, we expect to build on this momentum that has been gained during the second quarter of the period under review. I'm confident that we'll execute this strategy, putting our customer first, delivering relevant products and services, and enhancing efficiency in our operations. We remain committed to managing our operations ethically and responsibly. Indeed, our 2020 Sustainable Business Report reinforces our commitment to running a sustainable business. As we usher in a decade of action of United Nations Sustainable Development Goals, the private sector's contribution is critical if the set targets are to be achieved. We continue to integrate 9 of the United Nations 17 Sustainable Development Goals, which are directly linked with our business growth strategy. Adoption of the SDGs has enabled us to become a more sustainable company, creating meaningful impact on communities that we serve. In the past financial year, our social impact was valued as Kenya shillings 654 billion, which is 9 times the financial profit for the company earned during the same period. We sustained over 1 million jobs directly and indirectly. We remain an equal opportunity employer, actively recruiting diverse staff from different backgrounds to reflect the communities we serve. Our commitment to sustainable business and to become a purpose-led technology institution is espoused in our launchpad for the next 20 years. Cognizant that tech and data-driven economy can further support our economic growth, we intend to leverage more on partnerships to drive affordability and innovations in the future in GSM, mobile money, but also enterprise solutions for our customers, especially SMEs and MSMEs. In conclusion, to my colleagues at Safaricom, thank you for your innovation, for your commitment, for your dedication to ensure that we truly go beyond as a purpose-led technology company. I would also like to thank the board for support, and I would like to assure you that the management is focused to go beyond, to deliver our brand promise of being simple, transparent, and honest. I thank you all for your time. Let's go beyond. Twende tukiuke.
Thank you very much, Michael, Peter, and Ilana. Thank you very much, ladies and gentlemen. We have now come to the end of our half-year results announcement. For the members of the media and bloggers present today, You will have an opportunity to ask your questions at a separate virtual press conference, which will take place shortly. Invites for this have already been sent to you. Once again, we appreciate you making time to join us this morning. On behalf of the entire Safaricom family, we say asante sana and have a good day.
Yakaishi